day. I am Chartered, your accounting tutor. In today's video, we are going to continue under books of original entry, which is the second aspect of accounting, when we're treating the double entry system, and we're now in the with the first book of account, which is the books of original entry. So in today's video, we are going to continue with the first book of original entry, which is called the cash book. Mind you, I told you that we are going to look at the cash book without touching much on one column and two columns. The reason is because we are going to treat three-column cash book, because if you're able to appreciate or understand the three-column cash book, you have no issue with pausing into one column and the two columns. So we are going to place much emphasis on the three columns. Except you have any issue on one or two, you can call my attention to come back and address it. Let's look at the three-column cash book via the illustration for today. Now said, on the 1st of March 2026, Mr. Chartered started business with cash in hand of 200,000 and money in the bank of 100,000, full stop. Took a loan from the bank, 100,000, to add to the business. Here, mind you, the cash book have just two principles that are fundamental. All cash received or check received are debited in the cash book. All cash received and check received are debited in the cash book, while all cash payments and check payment are credited in the cash book. Please hold the principle very, very tight. Anytime money is coming into the business or check has been received in the business through the bank, such transaction should be debited. That is the left-hand side of the ledger of the cash book, while money goes after the business by way of cash or bank transfer or check, you now credit it, which is the right hand of the cash book. Now, in this transaction, mind you, I told you that the emphasis is on the account that I give and the account that I receive. Here too, though in the cash book, it is not double entry which will be crediting and debiting at the same time. But here, as I told you, we are going to identify the account that I receive or the account that I give to record just once. Here, let's look at it clear. We started business. Started business in accounting means capital. If you want to start business, you must have capital. And if you have capital, the owner is giving capital into the business. The owner is giving capital into the business. Therefore, capital, cash will be credited because the owner is giving capital into the business. So, but in this case, we are dealing with the cash book. So the owner is giving capital in the business by way of cash and by way of money in the world, bank, money in the bank. And as well took a loan. Loan here is not capital. So let's address the issue of starting business with cash in hand and money in the bank of 100,000 before we come back to this. So quickly, if you come to the cash account, discover that cash will be receiving because capital is giving and cash will be receiving. So on this day, which is 1st of March 26, cash have been receiving from capital, which the owner is giving into the business. And then the title here is capital. The particular is capital. And then coming to folio, you now say this is general ledger 1. Mind you, on a separate video, I'm coming to address the issue of folio in a very standard and clear way, why we call capital general ledger 1. Then under cash, the amount is 200,000. Then on the same day, the business received capital by way of money in the bank. And how much is that? 100,000. 100,000. Now we are saying that this is what the owner started the business with. Receive cash, which is in form of capital of 200,000, and bank, which is in form of capital, which is 100,000. And you can see cash have been debited because business is receiving cash by way of what? Capital. Then let's come back here where we are saying that on that same day, which is took a loan from the bank, 100,000 to add into the business. Most lenders are confused. They might feel that the loan here is capital. Loan is not capital. The loan is liability. The capital that the owner used in starting business was by way of cash and that of money in the bank. So taking a loan become a liability. Though loan is coming to add money to the business, but mind you, loan is not capital, and loan will never be capital, because the accounting equation says that capital plus liability is equal to assets. So capital is different and liability is different. And this transaction here is trying to prove the accounting equation, whereby the owner started business with cash and bank money in the bank. They want to borrow money to add to the business so that the business will continue. So loan is never capital, please. I want to emphasize. But all we know that money is coming into the business by way of loan. Then you come here, you see debit. Mind you, don't forget the principle of cash book, that all money that comes into the business are debited. And that is why cash was debited with capital, because money comes to the business by way of cash and by way of bank. Now money is coming to the business by way of loan that was taken from the bank. So here on the same date, which is 1st of March 26, the business take loan. The particular will loan. If you want, you can put bank loan. But all we know that what the business is taking is loan. That is, the business is receiving money by way of loan. Then coming to follow, this will be GL2. Then the loan will be by cash. Though cash is not mentioned here, don't put it back, don't put other bank. So the money is received by way of cash. You take a loan from the bank, you take it mostly by cash. So whether cash is mentioned or not, the loan was taken by cash. And how much is the amount? 100,000. So that is how you treat such transaction. So in this case, as you can see, it is clear that the opening transaction trying to prove the accounting equation that says capital, which is the cash and bank, plus liability, which is loan, will be equal to the assets that the business will acquire as the business continues. Let's look at the second transaction. We are now saying rent a shop for the business by cash 100,000. Here, mind you, we are still standing on the principle of cash book that says all money received in the business and debited in the cash book, all money paid are credited. So in this case, cash has been paid in the out, and the purpose of paying the cash out is to pay shop rent. So to cut it short, you can just say rent, or you can say shop rent. So you come here and then credit your cash book, because money is going out of the business. So anytime money goes out of the business, you credit your cash book. On this fateful day, which is 2nd of 3rd 26, cash is given to rent. And this becomes general ledger 3. And then the amount is under cash, because cash is going out of the business to pay shop rent, which is the same thing as rent. How much is that? That is 20, that is 100,000 euro. And then cash shall be credited. The next is bought shop equipment by cash. Here too, the principle is still clear that anytime money goes out of the business, you should credit the cash book, because cash is given. Mind you, from double entry, we say that all givers are credited. So cash now is given, should be credited. Then, but for what purpose that cash is being given out? It's given out to acquire shop equipment. So you now come here and credit your cash book on that day, which is 3rd of March 26. Cash is given out for a purpose. It is that purpose that becomes the particular, and is to acquire shop equipment. And this becomes general ledger 4. And then the amount is still recorded under cash flow equals by cash. Then finally, you come here to the fee. On the fee, when I say bought stationery for the business 5,000. Here too, the emphasis here is that cash is not mentioned. So most lenders will feel that this might be something else. Whether the cash is mentioned or not, it still means by cash, because it was not purchased on credit. If it's on credit, it will be mentioned. For the fact that it's not mentioned, you take it that it's still by cash. So cash is given out based on the principle of cash book. Money is going out to acquire stationery. They now come here on this fateful date, which is on the 5th of March 26. it will be under cash because it is cash that is going out to acquire stationery. And that is how much? That is 5,000 naira. As you can see, these are some of the principles that most learners find it difficult to record in the cash book. So as we continue, more of the illustration are going to come under the cash book, which we are going to address it. So please don't forget to follow my video, like and comment if there's anything. I will come back and address it, and make sure you share so that most people that are having challenges in the same area will be able to address it. Thank you. I remain Chatad.